Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. So what happened in the market last week? Let's take a closer look. The major global stock indices were marked by mixed performances across regions. U.S. stocks recorded modest gains, with value stocks outperforming growth stocks. The S&P 500 rose 0.6% and reached new all-time highs. Meanwhile, the Nasdaq ended the week flat. European markets experienced slight gains, with the STOXX 600 increasing by 0.8%, driven by the rise of major European stock indexes in Germany, France, and Italy. The Nikkei 225 fell by 0.6% due to uncertainties surrounding the Bank of Japan's monetary policy. The Shanghai Composite Index fell 1.1% due to concerns over weak Chinese economic data. The yen weakened to near 34-year lows against the USD, driven by interest rate differentials. Meanwhile, the British pound fell by 0.74% to 1.27 against the US dollar, influenced by the latest UK economic data and Bank of England's policy stance. The euro weakened slightly, dropping 0.30% to 1.07 against the US dollar. Oil WTI price rallied while gold price dropped slightly. Oil prices saw significant gains, with WTI crude rising by 3.4% last week, supported by supply constraints and expectations of higher demand. Gold prices decreased slightly by 0.4%, driven by stronger-than-expected U.S. economic data, which reduced its appeal as a hedge against economic uncertainty. Friday was a significant day, with approximately $5.5 trillion USD in options related to indexes, individual stocks, and exchange-traded funds expiring, influencing market movements. Retail sales increased only 0.1% in May, reflecting cautious consumer spending, while sales at bars and restaurants and grocery stores fell 0.4%. Industrial production surged by 0.9% in May, marking the fastest pace in nearly a year, with factories operating at 78.7% capacity. The S&P Global's Composite Index of business activity rose to 54.6 in June, its best level in over 2 years, driven by strong performance in the services sector. Longer-term Treasury yields fluctuated, initially falling due to weak retail sales data, but rising later on stronger business activity readings. Heavy issuance in the investment-grade corporate bond market, with high-yield bonds performing well amid improved investor sentiment. The Bank of England maintained its key interest rate at 5.25% as inflation dropped to the target of 2%. The Swiss National Bank lowered rates by 0.25% for the second consecutive meeting, taking its policy rate to 1.25% due to falling inflation pressure. The Eurozone Composite PMI indicated a slowdown in business activity, falling to 50.8 in June. PMI data showed stalling business activity, while exports surged due to a weaker yen. Industrial production rose by 5.6% in May, slower than expected, while fixed asset investment grew by 4%. The People's Bank of China maintained its lending rate at 2.5% and injected 182 billion renminbi into the banking system. New home prices continued to decline, marking the steepest monthly drop in nearly a decade. What to watch this week? This week is pivotal for investors, with significant economic data releases set to influence market sentiment. Political developments, particularly in Europe, also remain crucial for market dynamics. Keeping an eye on these events will help investors navigate the potential market impacts. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.